Ladies and gentlemen, welcome to another beautiful Discord meeting. You might be asking yourself, what in the F happened today? We had a huge pullback in the market. We're going to go a little bit over all of that with you, so that way you feel a little bit more comfortable, a little bit more sane, a little bit more silent, right? In this huge noise that we had today. We also have some awesome people. We got some new people in here. Welcome to, good to see you, Bob, B. Stewie, Dan Yankee, Dan, the greatest moderator alive, is with us today. Jimmy and sweet Jolene, not to mention my boy, your friend, the man, Covey, is with us today too. And if you guys want to be a part of these Discord meetings, you're more than welcome to join us. Click the link in the description down below. You can join us for absolutely $0 and 0 cents. All we ask is your time, your dedication, and your willingness to learn. That Linktree is there for you. You can catch me on all platforms, but what you want to see us in is that Discord. So go to that Discord and we can get started. And like I always like to tell every member in our Discord, you guys are free to interrupt me at any given time. If you have a question, as long as on the topic that we are talking about, you're more than welcome to bring it up and we can articulate on anything that's going on. So the very first thing we want to look at is the S&P 500. I got a little backstory to tell you about this, guys. Where and when do I like to get out of the market? That is the 21-day moving average. And if you've been with me any amount of time, you know when we get out of the S&P 500, it's either for a long time or a short time. But when we break the 21-day moving average, your boy Dave is not too happy, okay? I'm not too excited about the market. And right here, we can go back in the Discord and take a little peeky gander. When we broke here on this day, I actually called my financial advisor. I actually got about $250,000 out of the market that day. Right then and there, was not even worried about it. Gave him a call, said it's time to get out. The long-term account gets stunted. We get 80% in cash and 20% in bonds. That way I can protect my assets, right? We want to protect ourselves first and foremost. And the same goes with the swing trading on this small account. We have about 35 grand in this small account that I'm playing with, so that way we can swing trade. I'm constantly trying to beat my financial advisor who is making me a great amount of money this year, as everybody should be on this huge run up, right? I'm not bragging. It's just, if you give your money to a financial advisor, he better be doing better than you are in your swing trading setup. If not, well, guess who's going to be managing his own money? Okay, so we break the 21-day moving average. We are risk off, and I called him and I said, we're out. I want to get out. I might call you tomorrow though if we break up above. Well, guess what? We broke up above. I held on to it just to see what was going to happen. This day, the very next day, I called him in the afternoon and I said, hey, we are above a 21-day moving average. And even though these moving averages are kind of flat, I do want to get back in. But I also told him I might call you the next day, which is today, and ask to get out. In the pre-market, if you guys were with me in the morning, we talked about we were breaking not just below the 21-day moving average, but the previous day's low. I did not like the look of that, and I messaged him and I said, we need to talk. Before the market opened, my amazing financial advisor, and I've already texted him, I've already thanked him, but if you're watching now, thank you, Fred. You're an amazing guy, and I appreciate you. Oh, Nalani just busted in the door. He just kicked in the door, and he's speaking something out there that I don't understand. But it is good to have you in here, Nalani. You don't have to yell at me. We love you, bro. We love you. So anyway, this thing broke the 21-day moving average in the pre-market. I gave him a little jingle, and he got me out, and it saved me a lot of money. This move right here would have cost me between $6,000 and $8,000 in that account. Okay, and we got out. Not to mention all the stocks that we were in, other than one stock, ASTS, which we already had taken profits on previous day because of the way the market was looking. We are at break even on that trade, and we can go over it very, very soon. So what do I think about the S&P 500 here and right now? Well, first and foremost, I am risk off. That means I do not plan on taking trades unless we get a bounce, and I found a really, really good place to short the market. Now, that's not something I preach. I don't preach to short the market. It's not something I back test. But if I find a juicy trade on a base or a trend breakout where it goes the opposite way, I feel comfortable enough taking it. Now, I'm looking at this saying I am risk off. I am looking at this saying we are below a 50-day moving average. Will we get a bounce at a 50-day moving average? I almost certainly hope that we get a bounce here at this 50-day moving average. The issue is I have no idea. And anybody out there telling you that they know what is going to happen in the overall market is wrong. They have no clue. The market is going to do whatever the hell that it wants to. It doesn't matter how you feel or what you think about the market. We had a gentleman today in our Discord think and say, AMD, it's going to go to 200. Well, what's your thesis and why? Nobody knows where it's going to go. Sure, maybe over a time period of 100 years, it'll hit 200 at one point in time, but just to come out and say something like that, nobody really knows, guys. Nobody really knows. So I am expecting, and that's why we like to have more than one biasy. I am expecting to see a bounce in the market tomorrow. Will we get that bounce? I sure hope so. I always am rooting for your S&P 500 to head higher in case you have a 401k, a Roth IRA, or any investment vehicle that you have your money parked in, or your grandparents have their money parked in. You want to see it continuing higher so that way we can continue to make money. But again, the market does not give a shit. Now, this is one issue that I did not foresee. I expected, with Biden being out of the race, that we were going to get some uncertainty in the market. We actually did not. It started to pop up. There were some people out there that were giving their thoughts that because Biden is out, that shows less uncertainty. And my wheels started turning. But where is he? What is going on? It made me uncertain. Talking to my financial advisor, he was talking about all the uncertainty in the market. That very next day, as we start to pull back, not just myself, but many other people exited. That's why you see such a pullback. There is uncertainty in the market. And that brings me to what? The VIX Volatility Index. We've shown you down here, okay? And I always say, not to toot my own horn, and I play that train horn when we're live, but not to toot my own horn, guys, but I marked these out well before it happened. We talked about the contraction pattern and how we had been down here for quite some time. The last time we had fear in the market is up here. This was the tensions in the Middle East. Once those tensions cooled off, the market started heading higher. If you guys aren't aware with the VIX Volatility Index, this is your fear gauge. If there is fear in the market, this goes higher. There is a reverse or an opposite correlation to the S&P 500 with the fear gauge. What do I mean by that? Well, if we zoom out here, you will see right here is COVID. This is the big COVID crash. This was a huge amount of fear. People are fearing this pandemic, and then stimulus, monetary policy gets put in, and the fear starts to subside because people start spending their free money, okay? And now here we are again. What is this fear? Well, the fear and uncertainty comes from, where is Biden? What is America's stance? How are we going to act? There's also conspiracy theories out there like, well, what is going to happen? Where is Biden? What is going on with America in the long term? Aside from all of that, no matter what your policy stance is, no matter what you think, what we like to do is keep an eye on the S&P 500. So, to put things in a lot more simple terms, so you don't have to look at the fear, so that way you don't have to question what is going to happen. Right now, we are risk off, baby. That makes it really flippin' simple, folks. Now, if you're a gambler and you need some hopium, you need that stim, you need that dopamine dump, you're going to trade. You are going to trade your ass off here. You're going to take trades that are outside of your risk management. You're going to take trades that aren't the setup that we have been preaching on the base and trend breakout. That's exactly what you're going to do, and you're going to lose money. You know how I know? Because I've done the same thing on these pullbacks. I have done the same thing back here. Look at all this. Oh, I lost a lot of money here. Why? Because I did not have this same rules established with the 21-day moving average. No. Okay? Back here, same thing. If we got below a 21-day moving average, I was still trading outside my rules. After that, discipline started to form. Discipline, people. Once you start getting discipline, you start saving a lot of money. This break here, I did not lose much money at all. Matter of fact, I played one short sale trade, and that was on either SMCI or ARM. And it was the same base or the trend breakout that I preached to you guys. I played it to the reverse side. The same exact trade, but I played it to the downside, okay? Same thing with NNE. When we started to pull back, we get a break of the 21-day moving average. I played NNE as a base breakout or a trend breakout to the sell side. The volume came in. I played it this exact same way we would to the north side, flip the chart, upside down, lick it, stick it, see you later, bye. We are short sailing, okay? Now, with all that being said, we're below a 21-day moving average. We are risk off. Let's continue on now. I want you guys to know where I'm at. QQQs. What led this market to the sell side? The same thing that led this market to the north side. That is your tech-heavy QQQs. The Invesco QQQs rip, tater chip all the way to a new high of 503.52 with this blow off top here. Now, we are heading not just lower on higher volume, but we had a follow-through day to the sell side here, breaking much lower than that 50-day moving average. That is fear. That is fear, people. Let me keep on keeping on. Next up is the IWM. Now, if you guys were watching the IWM with me, I noticed a little something today. The IWM was the only thing holding up while the S&P 500 was taking a huge colonoscopy. As the overall market started to fail, the IWM held up extremely well. Now, the only thing that I hold in my long-term account, of course, in my swing trading account, I'm only holding ASTS until it stops me out probably tomorrow, even though it held up really well. It did. It held up really well today, but we'll go over that soon. The IWM, the Russell 2000, the small and mid cap area that took off as everything was pulling back, today held its 10-day moving average. Not only held the 10-day moving average, but it held up and it pushed higher while everything was pulling back. So it still shows me there is still strength in the small and mid caps. Will it continue to hold? I would like to think so. Matter of fact, I would love to see this form another trend here. Hold that 10-day moving average and rip off even higher, okay? Here's the big trend. We talked about this. I kept saying, not to toot my own horn, but I'm going to toot my own damn horn. This thing got really tight, and I said on Sunday, by the end of Friday, we are going to see a move in the IWM. Okay, and we got it. I said I had no idea which way. I didn't know if it was going to go up or down. I don't know. I don't have a crystal ball. Okay, but we headed higher. We rip, tater chip to the north side, and damn, it felt good. Now we're up here, and we're still holding this 10-day moving average. Will the IWM be what continues to head higher to save the market? Let's look at the equally weighted RSP. If you're not aware what the RSP is, this is a gauge that we like to look at that shows the S&P 500. It shows it equally weighted, meaning if you look at the stock heat map, this is your S&P 500 right here. You'll see that the technology services, see how much technology takes up the overall S&P 500? What we want to do is know where the S&P 500 looks if we take all of this and make it equally weighted, meaning finance weighs the same as technology, retail trade weighs the same as energy minerals, and communication weighs the same as health technology, okay? So when we take that and we look at that, we can see the RSP is still trying to linger around like some bad breath around that 21-day moving average. So we still have hope, people. We still have hope. Even though we had a huge pullback, we still have the 50-day moving average, and we still have that 21-day moving average. Now, we can just as easily break this and continue to head lower. But this at least shows that we have some breath in the market, okay? So what do we do here? What do we do here with all this damn information? Because this is a lot of information. We know that we're pulling back. We know that we're selling off. We know that times might be tough right now. This is the time to study, folks. This is the time. This is the whole reason why you are here. So I commemorate you right now. Thank you guys so much for being here, for joining up, because you are here to better yourself. This is where we look and we figure out what's hot and what's not. I like to say that because back in high school, we used to say that. Is she hot or is she not, right? We need to figure out what's hot and what's not. So what is hot? What is not? Well, that's why we use this sector ETF, Okay, we went over the S&P 500. We're going to go over Bitcoin. Bitcoin had a nice pullback as well. We know that it has a trend line up here. Now we're going to go over the technology. We already went over technology with the QQQs, but we want to go over it one more time. XLK pulling back, breaking the 50-day moving average. We are hands off on technology right now. It's not hot. XLE, this is energy. Energy also had a pullback today, which is surprising. You would think that with a day like today, people would want to use energy as a place for a safeguard. But I can promise you, today there was no safeguards. There was no place to park your money and be safe. Next up, XOP. What is XOP? That is your oil and gas. Oil and gas below a 200-day moving average. Not looking so hot for oil and gas. XLC, this is communications. Now, I'm very surprised that the trade that I was in, ASTS, still held out very well as communications broke the 50-day moving average today. This is looking just like the S&P 500 in my opinion. This thing really broke down. So is communication going to finally start to take a hit? Then if it does, where is the money going to go? Because as you guys can see here, communication has been the hot sector for quite some time with technology. Okay? So if we start to take a hit in communication, then we need to figure out where this money's going. Now we know that utilities is a safe place that people run to when the overall market's not looking good. And right here, you can see utilities is not looking so well. Dan Bob, go ahead and give me your heads up on what you have seen in your overall market as well. Whenever you're ready, let me know. So XL, go for it. Tell me what you've seen today, because I thought you brought up a very good point today, and I'd like for you to repeat that now.
Well, as far as the ETFs go?
Yes, sir.
Yeah, we were all red except for the defensive areas.
Absolutely.
And retail investors, we have the edge that we could jump out easily, but institutions can't. So they got to take that money and go somewhere with it.
And you did that same thing too. You did the same thing as I did, didn't you? You did it on your own, obviously, but you jumped out of the market. I know you were holding a lot of different ETFs in your long-term account for your investing strategy. Did you pop? You said you popped out of those too, didn't you?
I popped out of all of it except healthcare.
Beautiful.
Because I thought healthcare is going to be one of the ones that shelters.
Okay, and we're actually going to be going over healthcare here in just 2 more ETFs. So thank you for that, Dan Bob. I appreciate you. So XLU is a safeguard. XLU is still above that 50-day moving average. So that's looking good for XLU, but not good for the overall market when XLU is continuing to head higher. XLP now, right here is your consumer staples. You can see it's starting to stutter. It's starting to shake. Maybe this can continue to head higher, but consumer staples being what it is, might actually consumer staples. I believe this is the one. This is the foods and the stuff like that, right?
Yes.
I always get that and discretionary. So discretionary is the cars and all that good stuff. So yes, this is your foods. This is your this is all your goodies. This is what people would normally go into. Yeah.
Walmart, things like that.
Exactly. And this is where people usually like to park their money is consumer staples, because people will still need to buy things like food, right? And so the money is still going to be into your Krogers and your Walmarts and your things that people are still going to need to buy. So consumer staples. Now consumer discretionary should be down because people are going to be buying a hell of a lot less cars and things that they don't need. So here is your XLV, and look, Dan is continuing to hold on to XLV. It has been strong since January. It's been a very hot sector, and you can see here it is continuing to hold this area as healthcare is still on a rising 10 and 21-day moving average, well above the 50-day moving average. So XLV still seems to be a hot sector where everything else seems to be lagging right now or pulling back. So XLV is still one to keep on your watch list as it has hit a new all-time high last week. All right, so XLV, a new all-time high and still on an ascending trend line to the north side, breaking its descending trend line. We also have industrial. Industrial has now broke its 50-day moving average. We're not seeing much there. XLY, this is the consumer discretionary. We just said consumer staples, people like to use that as a safeguard in a downtrend. Well, right here is your discretionary. You're not going to see a lot of people buying cars. You're not going to see a lot of people buying things that they don't need, right? This is luxury items, guys. This is things that people like to go out and buy if they have that extra spending money. Well, if we don't have the extra spending money and now people are fearing more of a recession, then they aren't going to be buying those luxury items. XBI, this is your biotech. Now, this looks interesting as health and technology and biotech kind of go hand in hand. Biotech, we have been seeing a lot of biotech breakouts on the small and mid caps lately. So healthcare and biotech are the really only two things that you are seeing take off. Now, one thing I did find out from the Fed Chair Powell speaking in the Senate on Capitol Hill, a lot of the jobs are in healthcare, and it's all government created with that stimulus. That's a big issue, because if we stop getting that government spending for healthcare, we're going to lose jobs here too. So a lot of people are putting a lot of their money into healthcare because it's backed by the government right now, folks. Okay, healthcare, biotech, very important. Keep this on your watch list, because if the market decides to turn around, you're going to see some setups in healthcare and biotech. Other than that, we only have one other sector that I know is holding up well. This is not one of them. This is retail. It's below a 50-day moving average and has just been trading sideways. XLF. This is the only other stock that I know that is holding up well in this overall market. This is the financial sector. Now, we have seen the financial sector do really well. Now, it did take a hit today on higher volume than average, but it is still above a 50-day moving average and just below a 10-day moving average, holding that 21-day moving average and retesting its breakout area of 4250. Now, when we look at the overall ETFs and we see that we only have healthcare, biotech, and financials, the only thing that are holding up, well, you can guarantee, and I hate to be the bearer of bad news, bearer, pun intended, the bad news is the simple fact, guys, is if we don't have a lot of your sectors showing any type of heat, if there's not any heat in the sectors, then why would you want to take a trade in any of those sectors? If we don't have any setups, then why are we scouring the market for setups? The only thing I'm looking for is setups intraday. Okay? And those setups intraday are not back tested, they're not data tested, and that's where I come to my next conclusion. If you guys are learning from me and you're learning my base and my trend breakout strategy, I hate to be the one to tell you this, but we're hands off. We are risk off. And if you're trading right now, it's because you have a problem. You have a gambling problem. Because I know 90% of you in here, I know you, and not one of you have any other dedicated rules outside to what I have been teaching. So if you're taking trades right now, I'm not going to say that you're wrong, because as traders, and I do it myself, you need to take it on far less risk. So if your risk multiple at 1R, you need to take half of an R or a quarter of an R. You need to still use risk management, and you need to take those things, you need to write those out, okay? And you need to find your setups in this. No matter what side, whether it's a long or short, you need to figure out what you're doing. You need to find a new strategy in this type of market, okay? Because right now I am risk off. I am waiting. The main thing I am doing in this point in time right now is going over the ETFs every night, going over my watch list where we see big pushes up, pullbacks that follow and ride a 10 and 21-day moving average so we can look for the base and trend breakouts, okay? And if you guys are patient and you wait, you will see that it will be very, very rewarding. Because as you guys know, the past 3-4 weeks, we haven't had a lot of setups. The few setups that we've had, we've made some good money on. My camera is getting a little wonky right now. Let me fix this really quick, guys. But we have had quite a few setups. We have had a very lack of setups. And those lack of setups made me feel a little uncomfortable, as well as Covey, as he mentioned multiple times. Now, why do we feel like that? Well, because when we are trading here, sorry guys, let me get this figured out. My camera, I know you can't see my camera, but just for the record, let me see, zoom, auto. I hate you, Predator. I hate you right now, dude. It's hard enough as it is, you little turd. Oh, there it is, the focus.
You know damn well
Oh,
that was
well.
Dan Bob. That
Was
me.
it? I had no idea.
I didn't do it.
I had no idea. All right, whatever. I'm gonna go without it.
I
didn't
just knew it
do
was him because we have similar freaking humor.
I didn't do it that time. I
All
wanted
right,
to.
we're back, baby. We're back. So anyway, XLF is looking good. Where was I, guy? What was I talking about? Come on, which one of you guys can help me out?
You couldn't
Yeah.
get your camera working.
Yeah, okay. You're real cute. Yeah, see, none of you were paying attention? Come on now.
No setups.
Huh?
No setups.
Oh, that's right. So if there is no setups, thank you
setup.
very much, Dan Bob. That's why you're the greatest moderator alive. If there is no setups, folks, we sit back, we relax, and we wait like a sniper or like a lioness, waiting in the prowl, waiting for that attack mode. We're waiting and we're watching to see when the trend and the base breakout set up. Okay, that's exactly what we want to do. And if you're not waiting and you're active, you're going to ruin yourself. You're going to spend all your capital trying to figure out nothing, right? And you don't want to do that. You definitely do not want to do that. I promise you guys, it's just not worth it. So if you're patient and you're waiting and you're patient, you're going to see the setups come. Kobe and I will both be here, and you guys have all the tools. We give them to you. We equip you with all the tools necessary to find exactly the trades that we are looking for too. Throw them up in the general chat. You know, more eyes are better than none on these setups. So we're sitting back, we're waiting, and we're going to see what happens. Now, there's only one last thing that I want to do while we are here before I bring up your guys' questions. I took ASTS. Let me just bring it up on my brokerage. So ASTS. And why did we take this trade? Well, this will give you a little insight if you're new to this Discord of what I'm looking for. This didn't get nearly as tight as I would like to see it, but we had a base, and you can see this has followed the 10-day moving average multiple times. It has this ascending trend line come up here. You can see that this formed a trend line right here. When it broke out on this area, if we zoom in on the 5-minute time frame, which I can just do this, let me go like this for you guys. We do this on the 5-minute time frame. If we zoom in here, you guys will see we had much higher volume come in here. Look at the bottom down here. That way you guys can understand volume a little bit better. I zoom out here. Here is the trading days that led up to it. Much higher volume. As it pulls back, it trades less volume. And then the volume that comes in on the trend breakout. Okay, here's the 5-minute, guys. Here's the trend. Here's the breakout. Look at this. Much higher volume than the last 2, 3, 4 trading days. Okay, so we take it as long as it's within its average daily range, what at this time is 9%. And then we pull it down here, and it was half of its ADR at 4.14. We get into this trade, and I exited this trade half of my shares, a little over 1R. This was like 1.5R. Why did I take out at 1.5R and not 4R or 5R? Well, simply put, if we look back on its timeline, you'll see this was its most recent all-time high, first of all. And then second of all, if we zoom all the way out, on this daily, you can see this has hit multiple areas on the daily, 1, 2, 3 times the last time it got all the way up in this area. So I decided to risk off a portion of this. Also, we also knew that the overall market had broken its 21-day moving average previous to this. So I was not about to risk more than I wanted to. So now, after taking off half here, I locked in some profits around $100. Chump change compared to what I wanted because we are in a bad environment. I did not take full share size. And then here we pull back to my break-even area. Tomorrow morning, I expect to be stopping out at break-even. So I made my money on this trade. Now I'm hands off. I don't have any other trades. I don't have anything in the long-term account. I don't have anything in the short-term account. I'm just sitting back and waiting to see what the overall market wants to show me in the S&P 500. Once we get it back above the 21-day moving average, or at least do something like this down here where we have a psychological area of 500 where we bounced off of and we pushed up higher, then I will get back in. We get a follow-through day, you know, everything's going to be A-okay. But until that happens, guys, I'm waiting. I'm waiting to see what happens. All right? So that's all I got for you guys, but we got plenty of time to chat. If you guys have any questions, let me know in the chat. This is your time now, so let me know what you got going on. We can go over any tickers you want, any analysis. I guess the only other... the only other thing I want to point out before we get into the questions is we are still in earning seasons. There has been plenty of times where we've had pullbacks in earning seasons where the earnings show and make a huge catalyst that show the people that the market is okay, that there are still jobs, that we are still making money, that tech is still okay, and yada, 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 and we can still continue higher. So if you have any tech questions, or I'm sorry, earnings questions, you can ask about those too. We are wide open right now, so go ahead.
Can I make a quick comment?
You absolutely can.
There's one more thing we can be doing right now. We can pay attention to the stocks that are holding up in this environment.
Oh,
Because
absolutely.
like ASTS here, that breakout that took place, and that happened in a more average normal market, I really think it would have exploded. Because not only is it a strong company, they had really good catalysts that day, and they just had everything going for them, right? I just really think that would have been so much more. And we see how well it's held up over these last couple of days, even when everything else is going down.
Yeah, I have to agree with you 100%. That's why I mentioned we were going to go through the stocks. So we get a stock list from our scan master Paul every day. He refines the 500 of the relative strong stocks. So that's a great point to bring up, Dan Bob. Thank you. And one of the main things that we do is we look and scour the market for the relatively strong stocks compared to the S&P 500. So if there is anything that looks strong out there, we know that, hey, we need to keep an eye on this. We need to put this in our focus, and we need to apply some more attention to it. If it starts to set up and then the market starts doing well, that's going to be the first thing that we take as the market starts to head up higher. This going from a stage 1 to a stage 2 in your stage analysis by Stan Weinstein, that is going to be key, folks, to getting the biggest amount of profits. What else do we got? Yankee, you got anything? I seen you unmute yourself for a second.
Yeah, what do you mean when you say 1 hour and like half an hour? What does that mean?
Yeah, that's a really good question. So the first thing I'm going to want to tell you to do, and we'll go over it, but the first thing I'm always going to tell you is you need to go through our risk management section, which is one of the last videos. It probably should be the first video in our swing trading school, which is absolutely free to everybody. Just go to my YouTube and there's swing trading school. It's the first group of videos. Go to the risk management portion of it and it'll explain 1R. Basically 1R is if you are, so if you look at my screen here and let's say we decide to take a trade right here and we're thinking, okay, well this is gonna go up, right? Now this isn't my strategy, don't get me wrong, I'm just trying to explain 1R. And I'm gonna say, okay, my stop loss, because I preach stop losses here, my stop loss is this low of day at 540. 1R would say I am risking 1R, and that risk can be relative to who you are as a trader. I say no more than 1% of your account, especially when you're new, no more than 1%. So in my case, $340, $350 I can use for a stop loss, okay? So my stop loss at 1R is 1% of my account, which is $350 for this particular trade, okay? Really great question, and I'm glad that you asked it. So that's why when we say I took off half of my shares at 1.5R, that means I'm up 1.5%, I'm 1.5R of my risk. So if risk was $300, then I'm up $450 and I take off half of my shares, locking in $225. If I did that right, $225. And then that last half of my shares goes to break even, okay? And if you have any more questions on that, I really I want to direct you to that that live that we did because it's very, very important that you do watch that. Guys, any other questions? I mean, we got London on the track. We got plenty of time here, and we're more than welcome to answer your questions, especially when we got everybody in this chat. How are you guys feeling about the market right now? Swerve, what you got, Swerve?
When it comes to like risk off, I understand we're under the 21 moving average, so
Yeah.
we're risk off. Is it risk off only for breakouts, or if we see an EP like pre-market like financials look good and the volume looks good, would
Bro,
you be
great
willing to take
question.
it?
Great question, dude. That's a really good question, Swervo. You know, I'm glad you're here, Swervo. I think we found each other when I was live and we were talking about that Tesla trade where we had the undercut and rally right here. We talked about this undercut and rally and neither one of us took this damn trade. I hate you for not taking
Yeah.
this, bro. I hate you for not taking this, okay? Not me. I'm hating on you, bro. And I hate a hater hating because they never let it go. Okay, so great question. So he's asking about an EP. And if you don't know what an EP is, it's an episodic pivot. An episodic pivot is where it goes from one extreme low to one extreme high because it's taking the overall market by surprise. If this interests you, which it should because you can gain 500, 1,000% on your account in 1 year by taking these episodic pivots, you go to David Worrell's YouTube and you'll see that Covey has actually made an amazing video with Danny's help. He helped make this video and did an amazing way of keeping everybody's attention on this, and you can learn how to do EPs yourself. So the question at hand is, even though we are risk off, would we still take an episodic pivot in these types of market conditions? Now, that's a really, really good question. My knee-jerk reaction is yes, but on less share size. But that is to be asked by an expert, and that would be Danny. Danny would be the one to ask that question. I'm going to say, if I were in Danny's shoes, I would say he is saying yes. Yes, you are going to take it. You're still going to take it on full share size because an episodic pivot is usually the sign of good things to come, right? So if we say we get a earnings watch list, so we got a ton of earnings coming up here, guys, and if we get a huge pop-up, let's say, on PRG, we got this huge pop-up on PRG, and let's say we actually say that this is an episodic pivot, right? And we ended up taking this episodic pivot on an opening range break. Yes, you can play it, and you can see right here PRG. We could look it up what PRG is. These are totally different types of plays. So PRG is in the financial sector. We know financial sector is already in a hot sector as well, right? So you could go off of that saying not only do we have a catalyst, not only we have the earnings, now the earnings need to be up over 100%. And you can see this was a surprise by 25%, which is pretty good. The revenue up 3%, which isn't that good. So this is not an episodic pivot by any means, but if we act like it is and we take an opening range break, we also can say, well, we know that XLF or the financial sector is also hot too. So we have more than one reason to take this. Right? So if it's in healthcare, a biotech, which that has its own inherent risk, or in the financial sector, yes, that might be a good reason why we're going to take full size on it, rather than if it's popping up on, XLE, which is energy, and it's below a 50-day moving average, maybe we only take half or quarter size in. Okay, so that is going to be discretionary. That's going to be up to you. It's going to be relative to how you feel like we should do it. But yes, I'm still, if there's a good EP, I'm still going to take an EP. So that's a really good question. Thank you for asking that. Short answer, yes, I will take an EP. When it comes to the market conditions, I might not take it on full size unless I see some crazy volume, unless it really speaks to me, then I will be able to take that. Let's see here. Okay, Predator actually put in our general chat. If you go to David Worrell YouTube page, if you just go to our general chat, he gives you a quick understanding of where you can find all of those videos. The EP, the risk management, right here, it is on my screen so you guys can see the picture. And one more thing, just while I have everybody in here, if you want to use this charting platform right here, you can click my link, which we'll put in the general chat now, if you'll be so kind, Dan, Bob, or Predator. Throw my link, which is, you guys can find that link in the resources area, but use my link. You guys, it'll help me out a lot if you decide that you end up wanting to pay for the essential plan. You get it for absolutely free. Just use my link in case you do decide that you want to pay for the essential plan like I do. It's only $15 a month. You get a bunch of extra goodies with it. You get to use a bunch of stuff, but it gives me a little kickback for all the stuff I give you for free. You know what I mean? So we both get a little something because you get $15 off or one free month. So go ahead and use that link if you want to use the same charting software that I use. Also, we teach you how to set that up. Covey actually on our right here, you can see Covey made a how to set up your trading platform so you guys can know how we take these setups with the RS rating right here, the average daily range, and he goes over all the different indicators that come with this. So we get you guys set up and a great start. And if you're watching this at a later time, you can check this all out in the description down below. Click that link tree. You can click on the trading view link right then and there, and you will find where that's at. All right, let me check the chat here, the open chat. Predator put that up in the water cooler chat. Jolene says that is a game changer too. Hell yeah, I appreciate that, Jolene. Yeah, we absolutely love our trading view. All right, so do you guys have any more questions? Don't be shy. Unmute yourself or put it up in the water cooler or the general chat. Let me know if you guys have any questions or if there's anything that you're looking at.
Have you heard about the Trump supposed to be speaking at a Bitcoin conference here in a few days?
I only heard it from you. I don't see that affecting my trading at all. So that might be good general information for the masses. Thank you for posting that, Predator, in both the water cooler and the general chat. But here's my reasoning why. So you gotta understand why I don't necessarily focus on these things, because whether he is speaking or not, it can be taken as good news or bad news. But regardless, you're going to see the, let's just take a look at Bitcoin. You're going to see in Bitcoin, in the price action, you're going to see what's going to happen. So right here, I would call this that we're stuck in the middle here. We're above a 50-day moving average, but the 10 and 21 are still below a 50-day moving average, so we don't have converging setup. Like if you were to take a long here, you got your 10, your 21, and your 50 all lined up. The 10's above the 21, the 21's above the 50, so they're all lined up. So you know that you're getting a nice uptrend here, right? And we're above all those moving averages. As we're here, you have a basing top of that 74,000 and that basing low of that 53,000. So we're right in the middle of that. So it's a guessing game. So he might come out and he might say the wrong thing and it comes down, or it might not affect anything at all. Now we all know that Trump is for Bitcoin. Well, regardless of him speaking or not about it, it's going to show in the price action, right? So maybe he does come out. Maybe it is bullish and it heads up. Well, is it going to break through? Is it going to be enough volume to break through this area? Well, if it does, then we want to take a trade on it, because this would be a base breakout on volume. So we'll see that in the technical analysis of everything, okay? So when just in general terms too, though, when it comes to news or anything like that, I usually wait until after the news and look at the price action before I were to make a trade or take a trade on it. All right. Any other questions, guys? Talk to me, baby.
I have a comment.
Okay.
So Stock, we been following him more and listening to him more.
Yeah, Pradeep's awesome, man.
Yeah, he is. And then he was talking about it, that we need this violent, I think he said, a violent, I don't think what he said, but to bring down the market, and then that would be the new bull run that would start with the small cap and mid caps.
Hell yes. Now I love that idea. I love that you brought that up, and let's touch on that a little bit. So what Pradeep is saying, or what Dan the greatest moderator alive, is trying to revamp what Pradeep or Stock B has said, is this pullback right here. This is healthy. This is what the market needs and this is his thoughts. This is my thoughts too. They line up with this. But we need this pullback, because if we get a strong pullback, this huge punch, right? This huge punch, just a huge pullback, the stock's like a rubber band. If you stretch it too far too fast down one way, it's going to head back up the other way. Now, this is getting pulled back very hard, very tight, where IWM isn't getting stretched down because it's stretched up here. Now it's pulled back, but now it's holding a 10-day moving average. Maybe, possibly. This is the breadth in the market where we're getting a huge sell-off in one area and then the money starts to flow into the small and mid caps. Okay? And I would love to see that too. That is why I kept 10%. I'm like 80-20. 10% is in the small caps. I'm leaving 10% of that $250,000 in small caps because I do believe small caps is still strong. And until small caps breaks this 21-day moving average, I am still going to be risk on in this portion, but that's it. That's all I got. Okay. Now, I might lose a little money in the process. I could be completely wrong, but this is holding up well. Look at all this beautiful volume to the north side, and when we pull back on less volume here. So I would like to say that Pradeep would be right. Of course, you guys know, I always preach positivity. And also, as you guys know, I always say it pays to be positive. And here is a big reason why. Let me just pull this up, guys. I love referring to this as we have bull and bear markets since 1946. The average bull market has lasted about 5.6 years and has gained about 192% on average on each one of those bull markets. So that being said, if you're a bear or you're negative, you're going to be wrong most of the time. You're only right about 3 months every 5.6 years. That's bad. That's bad news, bears. You know what I mean? So these big pullbacks like this, instead of getting overly bearish or thinking the whole world's going to come to end or this is the end of it, this is a correction. Okay? Now, we could head lower. We could head much lower. I have been saying if we break a 21-day moving average, we're going to come visit this 50-day moving average. I'm sure you guys have heard me say that. So here we are. We're here visiting. I didn't think we're going to get here this quick, but here we are. We're here to visit, right? Now, who's to say we can't come all the way down here, fill this gap? Who's to say we can't come all the way down here and retest this area of support at 530? We very well could. I don't know. You don't know. But what we do know right now is we are risk off because we're below a 21-day moving average. Hell, we're below a 50-day moving average. We're double risk off, baby. So I like that you bring that up, and my ideas do line up with his too. If we're going to see rotation into small and mid caps, we need to see that allocation being removed from one area and going into another. Does it look like it's being removed here? Absolutely. Does it look like it's going into this? Quite a bit. So I can see where all that lines up, and I really appreciate you bringing that up, Dan Bob. This is, and I just want to say, this is why I love this community here, because I didn't hear that, but now I have. That's more eyes on this market. That's more ears listening in. That's more ideas. That's more of us coming together so we get a better understanding of the broader market. So thank you for that, Dan Bob. Anybody else have anything that you guys want to bring up, talk about, sing? You guys want to sing a melody together? No.
I'll pay you to sing.
I hate this deep. I hate this this deep breath before the plunge.
You hate. Say it one more time. You hate the what?
I hate this deep breath before the plunge.
Oh yeah. You think we're gonna go lower?
Yeah. I think a little lower. I think what we're gonna wind up with SPY. What I was looking at on daily was that we have a base between 537 and 529.
Okay.
I think that's where we're gonna wind up before it might come back up. But I'm more referring to the fact that I have finally saved up some capital and I'm ready to use it. And you know the conversation I always have with you. I have a small account. So, I went through the painstaking part of actually building up my account a little bit to actually have some fun. And, I'm all dressed up and know where to go now.
Yeah.
I got nothing to play on.
Hey, dude, and that hurts the most, doesn't it? Having to sit on your hands.
It does, but I'm referring to the learning potential of getting that patience.
Yeah.
Understanding that this is a part of the game that you need to play, and if you can't play this part, you ain't gonna play the next part any better.
Yeah, you're not gonna survive. I tell you, if I didn't learn risk management when I first started, I would have blew up my account. I have to say I'm one of the very few traders that hasn't blown up his account and technically you could say I blew up my account, but I did it in such small increments that I was able to continue to fund my account. So that way I stayed above PDT, and then anytime I, got an extraordinary amount, I was able to continue, But risk management, especially in the pullbacks, are flipping key, guys. It's so key. So yeah, I like what you're saying though, Predator. It's going to be hard, but this is a huge learning experience. And if you can hold out and you can stay disciplined, it's only going to help you. So we're below a 21, we're below a 50. Let's wait and see what happens, you know? And everybody's going to want to, right when we start to turn around here, we're all going to be like, oh, that might be the turnaround. It's bouncing off the 50. But if we can wait, if we can wait for a follow-through day like we see right here, you know, this follow-through day where we get this volume and then boom, the next day we get higher than average volume and it gaps up, now we're risk on. You know, or in my case, we pulled back, we tested this 500 psychological area, made a new higher low, and then we came up and we came down and we did a double bottom here, retested that $500 area, and guys, I called this out beautifully, you know, and we took off and then we're above the 21. So I only got in, you know, half of my account, and then once we started breaking up here, I started in on margin because we're above a 21. You know, I made a bunch of money on this, you know. So with that being said, we have to be patient. We have to be patient. So it's a great point that you brought up there, Predator.
Just to another comment. Go ahead.
Go ahead, Dan.
Just a quick comment. While we were speaking here tonight, they found Biden, but he has a giant bruise on his face, which is kind of weird.
You being serious?
I'm being serious.
He probably fell again, man. He's getting up there in age. Regardless, one thing I like to say too, just about being positive, is that no matter your stance on what's going on or who you vote for or anything like that, because none of it matters. All that matters is if you are rooting against, you know, who's in presidency, then you're not rooting for America. So regardless of, you know, how silly Sleepy Joe is, you know, we want to make sure we have a clean handoff here, because we don't want civil war, we don't want war, we don't want anything to happen. So, you know, I'm rooting for America. I'm rooting for the best. And, you know, it sucks that he's got a big bruise on his face. You know, it sucks that, you know, we have a president that, you know, it looks as if though things are weak right now. I really hope the best for everybody. I really do. It sucks that we had an assassination. Things are very uncertain in the market. That's the only reason why I bring this up right now. I don't mean to make it sound political at all, because I would never be political. But I'm rooting for America, guys. And as Warren Buffett says, as long as you believe in America, when the times are tough, you're going to make money. And that's why I always say it pays to be positive. That's why I bring up that chart over and over and over again about how the average bull market is much higher than the bear market. It pays to be positive. So we want to be positive. We want to be positive about a good turnover. We want to be positive that, you know, that everything is going to work out. So any other questions, comments, concerns? Talk to me.
I have one comment.
What you got?
I have one comment. It's a fantasy comment.
Okay.
It would be nice.
Careful what you say.
Well, hold on. It's not getting dirty, so we'll be all right. It would be nice if when we start to pull out of, let me refer. That's just going down the wrong path. That terminology. Hold on. It would be nice if after this pullback, all right, and if we can actually catch, I guess the ascending trend. It would be really nice if, for all our efforts, well, for those of us who are waiting to do something, it would be nice if, for all our efforts, if we could actually get an episodic pivot play in.
Oh, brother, you're absolutely right. And that's why every morning
we're a lot. I know.
Yeah, no, I mean, you know, you're only going to see a couple of these beautiful ones every couple of years. You know, I think it was SMCI that Covey and I were sitting here watching. This was a beautiful episodic pivot. The thing with this one here, I remember watching this whole thing play out. And then we get this right here, this volume that happened. This was an earnings leak. It actually happened, an earnings leak. And then the earnings came out, and this thing continued up much, much higher. That was crazy, dude. That was crazy to sit here and watch. Covey and I just sitting here going, holy shit, do you see that volume? Not to mention it was in a hot sector as well, you know? And I just seen this thing rip. And then I had friends that were in jiu-jitsu that didn't know a damn thing, not a damn thing about stocks going, Hey, Dan Bob, unmute Nalani for me, would you? Or text him and tell him to join up. That we're talking about SMCI, and so I knew that there was a top coming, and I tried to tell him like, hey, this is looking like it's going parabolic. If you haven't taken profit, I'm not trying to tell you what to do, with your trades and stuff, but you're up, 100%. You should maybe, just protect yourself a little bit. And it's funny because he told me his game plan. He says, oh, no, if this pulls back, I'm going to add into it. It pulled back, and he said, all right, I'm all out. It's funny how people change their mind when this stuff happens. But, yeah, back to the episodic pivot. Yeah, I would love, and that's why the more people we have in here that understand what episodic pivots are, the more people are going to bring these up. The more of us are going to get into it. Can you imagine having this whole crew in here be able to get into this episodic pivot in one episodic pivot, and we all make fucking bank? That's what I want. I want everybody in here to make money. Not just me, not just Covey, not just Dan Bob, not just beautiful Jolene. We all want to make money, okay? So, yeah, I agree with you, Predator. All right, Nalani, you are in here. You're unmuted. You will have to unmute yourself. Oh, there you go. Talk to me, Nalani. What you got, bug dog?
So regarding the ETF, right, Dave? So IMW is like small cap, right? So what we got for mid cap?
Can you ask that one more time? You sound a little bit muffled there.
Like mid cap?
Yeah, mid caps.
Yeah. Mid cap.
Yeah. What about it? What about the mid caps?
Okay. This is small cap, right? IWM is for small cap, right?
The IWM is small and mid cap.
Oh, okay. It has both. Okay.
Yeah, it has both in there. Actually, this says U.S. small cap field, but we can look it up because they still hold mid cap in there too. They do have a mid cap only for the Nasdaq. Let me look it up really quick. I think it's a 50 U.S. mid cap. Yeah, there's the U.S. Okay, let me look it up really quick. All right, here's your mid cap. So this is mid cap only. It almost looks like the RSP, which is the S&P 500. But yeah, this is the U.S. mid cap right here. And we can add this if you want to start looking at this too. We can add this symbol to this, so we can start looking at this with a little bit of everything else. I just look at the small caps. The small caps have the mid caps in there. We can look up, let's see, what is in the IWM.
What is the ticker on the mid cap one?
NQUSM. So let's see, exposure small cap public. Yeah, it's saying the IWM is just all small cap. I always say small and mid cap because a lot of these don't exit out of the small cap after they start ripping up higher. And then you're going to have, usually your SPY is going to be large cap. But we can start looking at more just mid cap only if you want to. That's fine. We'll keep this on our radar as well. So we'll throw IWM on this. So that way we start looking at a little bit of everything on this just for you guys. So we'll have the SPY, we'll add the QQQ because that's just straight tech, even though we have the XLK on here. I like using QQQ. There's many different tickers to look at many different things. But if you like looking specifically at mid caps, we're more than happy to do that for you. There's a few other ones that we can look at that might be a little bit more liquid, but this one will work out for now. So if you have a favorite that you like to look at for mid caps and stuff, we can add to it, okay? Swervo says, caught SMCI put on that Friday in February. Hell yeah, dude. I actually, I think it was this Friday here. I played it here. I took a short here, and ARM, I also played ARM right here, actually. Tuesday the 16th. We were in a bad time in the overall market, and I played it just this one day, and I probably only caught it for 1/8 of the move, but I made a couple $1,000s on that, so it was pretty nice. Okay, we got Jolene saying we need to use this time to really study. Yeah, the 5-star charts. Get our risk rules so tight that we catch these. Yeah, you know, and I agree. So RGS, like this is the stuff we're going to study, guys. See this? This is the shit we need to study. And Jolene's absolutely right. These are the only types of trades. I might start getting more and more boring on you guys. And I hate to be the guy that gets boring, but you know what? We can be excited and happy about all the different trades that are going on. But when it comes to my trading specifically, I'm only wanting to take trades like this. There's a lot of trades that look similar to this, but aren't this. This is beautiful. Big push up higher, a pullback, riding a 10-day moving average, getting very, very tight here, and then exploding to the north side. The only other trades that I've seen recently was it MDIA? MDIA on the 5-minute? No. What was that small cap stock just a couple days ago that we played, or yesterday? MDIR? Was it?
MIRA.
MIRA. Who told me that?
Swervo.
Thank you, Swervo. Yes. So look at this, guys. So this is the same exact setup. So we can even bring up RG. I'm going to put these side by side for you, okay? Here's RGS. Here's the setup on the daily. Here is. Oh, this is going to be a douche, isn't it? All right, here we go. So here is RGS on the daily, and here is MIRS on the 5-minute. Do you guys see the similarities here? This, I'm telling you, this looks like the exact same stock, doesn't it? Look at, look at this. This is. I'm glad you brought this up, Jolene, because it made me remember this. So this is what I mean about when I'm taking a trade and I'm looking for this exact pattern. This is that exact pattern. This is on intraday, though, on the 5-minute. I did not take this trade. I got to watch you guys take this trade. I got to watch Jolene make money without me. Jolene, Rivian, how about that? But she took this trade, and it was a beautiful trade. And this is this same setup as RGS, only it's right here on MIRA. So we're training our eyes, guys. This is exactly what we want to see. So I'm going to start keeping an eye on those intraday trades. Okay. So here's RGS. Here's MIRA. Let's take a look at another one. NNE. NNE was a beautiful one. We got to put this on the daily though. Okay. So here's NNE right here. Look at this. What does this look like? What does this thing look like? It looks like RGS. The same exact trade. That's what we're looking for. This is how we're going to make millions, folks, with these types of trades. Okay? Jolene, thank you. RGS haunts me, Nalani says. I got off early. Yeah, brother. Yeah, it definitely haunts me too. Mo Wealth is the only one just eating this up, man. He's eating this thing up. He needs to quit bragging about it. No, I'm only kidding. He's not bragging. He's very, very cool about it. What else we got? What else you guys want to bring up? Talk to me. I'm glad you brought that up, Jolene. You're absolutely right. We need to just study the 5-star setups. Talk to me. What's up?
When you bring up MIRA on the 5-minute,
yeah,
I understand how they look similar to RGS on the daily.
Yes.
But for entry, stop loss wise, I understand on daily setups when you enter, you put your stop at the low of the 5-minute range of the low of day of the day breaks out. How would it work on the 5-minute of MIRA since you can't really drop down?
That's a really great question. So your stop loss is always going to be discretional and relative, right? So it's going to be on what you want. Me personally, if I were to take this, I would want to give myself some room while not creating too much heartache. So if I'm expecting this thing to break out, right, maybe we use previous candle. Just like in a daily chart, we could use previous day's low. So if we're breaking out here, we usually use the same day low, right? We can use the previous candle's low if it's still holding above, in this case, you know, here's the 5-minute, the 10 5-minute candles, right? Average right here. We could use the previous day's low. Now, Swervo, when it comes to these intraday setups, I'm not preaching these. I'm not teaching anybody how to do these. I'm saying this is the same setup, okay? I do not have rules that are set in stone on this, and we need to be very, very careful when I'm talking about these, because I'm just talking about the setup. I'm not saying that I have buy or sell rules on these at all, okay? Because I don't. And this hasn't been data tested or back tested in any way, shape, or form. The only thing I want to point out, the only thing I want to say is that this MIRA is the same setup as RGS, is the same setup as NNE. When it comes to the buy and sell rules, there's many ways you can do this. Right here, this base low at $1.65, the previous candle, the moving average of your choice, that's all depending on you and what you want to trade. But you also have to understand that this is a pharmaceutical. It's got already inherent risk. This thing, if you don't put your stop loss in immediately, they can rug pull and it could just go break the absolute bottoms and go straight to zero. As you can see, that happened on FLYE, that very next, or not FLYE, I forget which sticker that was. Was it RYDE? I don't remember now.
No, it was it was Fly.
Oh, FLYE. Okay, thank you.
Yeah.
Thank you. Okay. There it is. It can do shit like this, right? This was dilution, though. And that's what you're going to see a lot in biotechs is dilution. FLYE, I pointed out that it had dilution. It had all that shit. It was still holding up, though, well. And then they diluted the stock. It couldn't get pushed up any higher. It failed. Any biotech, anything like that, is going to have issues there. So, all right. Any other questions? Comments? Concerns? What up, big dog?
We got GDP and initial jobless claims in the morning, correct?
So let's just bring that up really quick, and I'm glad that you said that. When it comes to GDP, initial jobless claims, and all that stuff right now, you guys got to understand that for the longest time we were so data driven. Now I don't even know if the market is going to react to these, but it's very important to know. So thank you so much for bringing this up. We are risk off. So I'm not so worried about what these numbers do. We would have to have some wild number to change the direction of this market right now. But gross domestic price usually is going to be a very volatile time. So at 8:30, we're going to get GDP coming out. And I will make a short video on GDP when it does come out. Also, we have initial jobless claims. This is going to be very important that this number is far lower than the forecast and the previous, because right now we are in fears of a recession and people losing their jobs. That is the biggest balance that Powell has said out loud. He says he doesn't fear so much a cyber attack as he fears having the balance of inflation coming down but still being able to keep those jobs at a high pace. All right. And the last forecast with the initial jobs claims came out a little higher than expected, actually a lot higher than expected. So we want to see these initial jobs claims hold out and not be higher than the forecast and higher than the previous. So let's keep an eye at 8:30, that GDP initial jobless claim. Beef Stewie with that nice bringing that up, man. I totally forgot about bringing this up. I was so thinking about the market and the pullback and all that stuff. So thank you for that, Beef Stewie. I appreciate you. Yeah, we'll definitely be there at 8:30 to see what happens for that. So thank you. Any other questions, guys? It's starting to get late. We're approaching a little after 10 o'clock, so I think I'm going to stop this here. But I want to say thanks, guys. I really appreciate everybody being here, especially the new guys that showed up tonight. We do these quite often. Check out our schedule. I want you guys to always know there's no dumb questions. Even if you don't want to ask them in here, you can ask them in the general chat. We are all new at one point, so it doesn't matter how dumb the question is. We want to get you up to speed. This is a fairly new Discord, and as you can see, we have a ton of people in here. We got 6, 7, 8, 9, 10, 11, 15 people just in this chat right now, not to mention the 150 active users that we have in total that are in the general chat. I want you guys to realize that we're all here to help. We were all new at one time, and as long as you guys are here now, it's only going to get bigger. So I want you guys to learn as much as you can, because the bigger we grow, the more people we're going to need to help show the newer guys when they come in what's going on, okay? So we'll see you guys in, I hate you. I hate you with the damn quacks. I'm just kidding. I love it. I hope you guys have an awesome night, and I will hang out here for a little bit to see you out. So hope you guys have a good night.